Hello everybody, welcome to another video here on my channel. This is episode 25 of my Chart Annotations Review Series and sort of transitioning back into my charting sessions. My charting sessions are basically the same thing as my Chart Annotations Review. I'm just now caught up and I'm going to be going over like last Friday's action and today's action. I did not trade today. I had quite a bit of stuff to do, but tomorrow I should be able to trade, and for the rest of this week, I now finally have the schedule to where I can actually do that. So that is amazing. I still obviously have work at night, so sometimes I may not be able to do a charting session, but I'll still find the time to do it. Don't worry. So this is Friday the 14th. So yeah, let's first go into a bigger time frame and kind of look at what's going on. Also, my allergies are pretty bad, so I may like sneeze and stuff throughout the video, whatever. So we've just been having a massive run, right? If we look at the daily action, we've just been having just a movement up, and we go down to the 4-hour. You know, same thing here. We just keep moving up here. And then 1 hour, in the 1 hour here we have some liquidity. We can mark out this buy side right here and this sell side. So this is sort of the range that we're in, right? Now you can kind of see where we're going to go. And that's what's going to be nice about starting these new charting sessions, is we're not going to see where we're going to go. Go to the 15-minute here. We had a sell-off. We did not take out this low, and we had a reaction off. This is kind of showing me that this could possibly be engineered sell side, especially because we see these annotations up here. So that means we may come down, you know, to take this out, take this out, and take this out in the future in a massive sell-off. Go to the 5-minute here. You can see we're in this 5-minute fair value gap, which also shows with all these. Okay. Yeah, let's also look at... Actually, I'll just look at that in the next one, in the next day. Okay, so this is going to be kind of like the very last thing of me going over just the basic turtle soup concept of SMT, TP, and protected lows. Okay, so right here, and also macros as well. So just these concepts is just intraday action without a bias, and then we'll start adding bias in, start adding bigger PD array or bigger time frame PD arrays, and then it's all going to come together in my actual charting sessions. So right here we have an uptrend going into this macro. We sort of have a downtrend right here. We'll kind of see what happens. Could be a downtrend going into the macro, could be an uptrend. It's kind of hard to tell, so we'll see what plays out here. So we have market structure shift down, so this is an uptrend. We should respect this fair value gap to go lower. We hit the fair value gap and we go through it. So that kind of shows me that we're going to be bullish, but the macro is pretty much over. Alright, so we create an SMT right here. We should disrespect this liquidity gap if we're going to be bullish. So right here, we close above it. We're still in this fair value gap. And we get a massive displacement up. Now, we had a bit downtrend going into this macro, so I can expect us to possibly go a little higher here. So we went a little bit higher. Here's the first PD array we tap into. Get a little buy up, but we create an SMT displacement down, taking out this SMT TP, and now our target is discount of this range right here. We tap discount, then we buy back up to take this previously protected high. I think we just consolidate a bit here. Alright, so right here, we form an SMT. We have just consolidation, and it looks like we go higher here, We take out this SMT TP, which is the target from this SMT. We sell right back off, and we tap into this order block. So I writ this order block here. The thing about this, here, I'm just gonna delete that. Anything, you see how I mean, this is all consolidation, but specifically right here, you see how right here, it's just like this area of consolidation. Price will want to come down and sort of tap into it. And so in this example, I just did the most previous order block, which is right here. And that's what we respected off of. You buy up, take out that SMT TP. We go a little higher. Okay, we have an uptrend going into this macro. This right here, I remember charting this out. This is just because ES was making just lower lows right here, while NQ is making higher highs. Okay, so after this happened, get displacement down, create a fair value gap. Right here could be a possible entry. This is the first entry I actually see that looks good in this whole day so far. So the reason why this entry looks good is because we have an SMT. We have, okay, first of all, we're in a macro, okay? Always identify where we are in time and price. In the time, we are in a macro, okay? We have an uptrend before going into this macro, so we expect us to reverse the downside if we get a bearish model. Right here's our bearish model. We have an SMT, displacement down. We tap up into this fair value gap. This would be your entry right here, a little bit into the fair value gap. This is your entry. This would be a good play. I could then see us sell off to this SMT TP. We tap the fair value gap one more time, and then we sell off to the SMT TP, just like that. That would be your TP. We also do tap into this 5-minute fair value gap right here as well. And then after that, if we get some displacement up, especially with the macros over, we get some displacement up, disrespect a bearish PD array. Right here, we disrespect it. I could see us now run up to this protected high right here. And then right here, this can be your entry. So this could be another entry to aim for the protected high. The reason why is because number one, we tap into this we tap into the 5-minute fair value gap. We take out this SMT TP. That's number two. Number three, we disrespect this bearish PD array. And number four, we tap into a bullish PD array, and boom, right up to the previously protected high. And then we create an SMT up here, right? We have a little bit of displacement down. Fair value gap created. We tap into the fair value gap. This would be first entry, and you would take TPs off. Number one TP you could take off at this fair value gap. Possibly like this low right here. So this could be a TP, and another TP you could take off down, obviously at this SMT TP. It may be discounted this range. You can see right here, first entry, and then after this gets respected and we get displacement down, we can come up, and this second fair value could be second entry. So that second entry, we come down. This would be possible third entry. Just put entry here. That's possible entry. We come down, and then we finally take out the SMT TP. We also do have these previously protected lows that we probably will hunt. Maybe not yet, but in the future possibly. Okay, so now before this macro, we're in an uptrend. So we'll see what happens here. Right, uptrend. Okay, so now a couple things happen here. We have market structure shift. This is market structure shift, but where's the fair value gap? There's no fair value gap really created. Not really an order block either. I mean, you sort of have this breaker block, but it's really not that good. Right, this could be a breaker block. Wait, where's it at? Come on, breaker block. BB. BB. Am I stupid? There it is. But it's really not that good. So I wouldn't take it. I also usually just don't do breaker blocks with macros. So this right here, SMT created. This is something I like to see to head lower. Right, we have a bullish PD ray. Are we going to respect it? No. Now we have a fair value gap created right here, or an inverse fair value gap up here. Fair value gap. We don't end up tapping into it. Now that the macro's over, I don't really care to come. I don't care to take an entry back in here. All right, so right here we create another SMT. We are disrespecting this bullish PD ray. Now we have an order block right here. We'll see if we come back to tap into this order block. We don't end up tapping into it. Let's see, we take out this low. We take out this low right here. I guess we just keep selling off. And no entries in here. Okay, so now we create an SMT. And this is beautiful to see. This is where I would take a very, very high position trade. Right here, this is going to be a very, very high position possible trade. We have a downtrend going into a macro, a very, very clear downtrend. We have a previously protected highs right here. These are two previously protected highs. We also have an SMT, a bullish SMT, showing that we want to reverse. And this is the SMT up here, SMT TP up here. So with this macro, you can see right when we enter the macro, we have displacement up. I do want to see us come down and tap into this fair value gap. If we tap into this fair value gap, or any fair value gap that we tap into, I would take a trade. The only problem is that we could be so bullish right here that we may not even want to tap into anything. So right here, this is the first thing that we tapped into. So we tap into this fair value gap. We tap into this fair value gap. So we're taking these trades. This can be right here in this bottom fair value gap. This can be first entry. This can be second entry. And we come up and we take those. So right here, if you did enter just half of this move, this would be 33 points. Right? This would be in the 30s of points. That is insane. Insane trade right there. If you recognize this from the bottom, if you decided, hey, I see this big candle up, I have experience and I know that this is going to be a complete reversal to go up here. Let's say you did take an entry there after this candle closes. That would be a possible 53 points, in the 50s of points. That's insane. We also do have this previously protected high. We'll see we go up there as well. Might get a little bit of a retrace. Retap into this 1 minute for value gap. Are kind of respecting it. Not really any SMT showing yet. We do have an SMT right here. We break through this bearish fair value gap, and we take out the SMT TP, and we keep going higher, and right here is where we take out this protected high. So now we're having an uptrend going into this macro. Alright, so right here we form an SMT. We come up, take out this SMT TP. Wait for some more structure. Now we create an SMT up here. This would indicate the reversal, but we are at the end of the macro now, so it's more difficult. We come down, and since we form an SMT right here, we do end up taking the SMT TP. This entire thing right here is also an SMT, one SMT. So this low right here technically took out this low on ES. That's why there's an SMT right here. So that got respected. We come up. We take out this protected low, this SMT right here. We form an SMT right here. This would be your first possible entry. Now, this right here, it's probable, yes, but like it isn't as probable as I would like it to be. And the reason why, it's kind of hard to explain. It's just like experience. It's just looking at this. All this is an SMT in retracement to fair value gap, and this is what these next charting sessions is going to go into. Is that like there's not really much certainty that this is going to get respected because it's just SMT fair value gap, right? There's really nothing else. We haven't taken out this protected high. We don't have a macro coming up, right? We still have this buy side up here that wants to get taken. The strength for this to respect is really not that much. So let's see what happens here. We come down, but are we going to take out this low? This is the low I would want to be targeting. We don't end up taking that low. Do we take this high yet? No, we don't. All right. Now right here, we form an SMT. This is a bullish SMT. That's more probable. We have this recently protected high that we're very close to. This would be SMT TP. So we have these three PD rays kind of close to each other. We also disrespected this model right here with this SMT and this SMT TP. So this kind of shows me that we are bullish and we want to go to the upside. So I would expect this to get respected. In addition, if we have an SMT right here and this gets respected, like we have a fair value gap right here, right? We have this fair value gap. If this gets respected, we could possibly take an entry, just head up straight to this high. Now with this since this is so long, I expect it to just be a consolidation for a little bit. But you could see that we do respect this 1 minute fair value gap, that this SMT, the second candle wick of the SMT, it respected this 1 minute fair value gap. It gets respected the whole way until the SMT TP gets taken. So now we're in an uptrend going into this macro. We also did take out this protected high. We still have not taken out this buy side, but this macro does indicate a reversal. We also have respected this bearish P array, came back up to it again. We also created a bearish SMT. I want to see this get disrespected. All right, so that basically it's disrespected almost. There we go. And let's see what happens here. We come up, sell off to this SMT TP, and we sell off to this protected low. Right, now we only have 15 more minutes in the market open left. Let's see if any last move with this happens. We form an SMT right here. This SMT TP should get taken, and then lastly, this protected high should get taken. So that gets taken, and then look at this. At the end of the day, this buy side that we were waiting for also gets taken. Right, this buy side since Thursday, that finally just gets taken right here. So yeah, that's really all I have for Friday. Now we're gonna have to go into today's action. So I'm going to go to the 15-minute here. I'm just gonna clear out this over here. All right, 1 second. Let me do that. Let me select all this. Okay. So now let's work our way to, let me go to the 15-minute. Let's work our way to this morning. Okay. So now let's say I'm looking at the chart and it's in the morning of today. This is exactly what I'd be looking at. If I was to do this, I'd start in the 15-minute. I want to see kind of what things are looking like. So first of all, I can see on this 15-minute that we have this fair value gap right here that has gotten respected multiple times. If I'm to draw out some liquidity levels, I see we have buy side liquidity here. We have sell side right here. we're sort of in this range. We also are in this 15-minute fair value gap. Where's the draw liquidity looking like? Well, let's look at what's being respected. So we respected this bullish PD array, we came up, created this high. We came down, we respected this bearish PD array and took out this low. Then we came back up and we took out this high. And so it kind of just depends on what's going to happen next. We're also tapping into this 15-minute fair value gap. So it's either, is this 15-minute fair value gap going to get respected in addition to a sweep of this high? Or, which is bias liquidity, or are we going to disrespect this? Yeah, are we going to disrespect this fair value gap, go lower, or are we going to respect this and go higher? So that's what I would just wait to see what happens next. Looking at the 4-hour here, let's see if there's any addition. We have anything in addition to this. So 4-hour, I can see that. First thing I can see is we have this massive 4-hour order block, which 4-hour order blocks do tend to get respected pretty well usually. So right here, actually if we look back here, let's see if there's any examples. We sort of have an order block right here that gets respected, order block right here, or not, order block right here. Order block right here gets respected right there. Right, there's examples of order blocks getting respected, but right here we have one. We come down, we tap into it. We could go lower, we could go higher, but that's what happened. We tapped into it. We got a candle wicking off of it. And after we tapped it, which, where did we tap it at? Is that the tap right there? Hold on. 6 a.m. Wait, 6 a.m. when? Monday, June 24th, 6 a.m. Oh, this is probably actually, hold on. We're probably actually going to come back down and tap it again. We probably haven't tapped it yet. That's the thing I don't like replay mode, because that wick was probably somewhere over here. It's probably in the future a little bit. So anyways, if I'm looking at this chart, we have not tapped into this order block yet, right? Here's the order block. We have not tapped into it yet. So since that is the draw of liquidity, we're also in this 15-minute. I'd honestly just wait a little bit. So 15-minute, here's buy side taken. We have displacement down. Now inside of this 15-minute, you can see a little bit in here. We retrace to discount. Now keep in mind I have this bias, okay, and then in addition to that, I can go over to ES. I'm going to try not to spoil ourselves too much here because you can kind of see where things are going to go. But now with ES, I can find SMTs. So for example, we look right here. One second. Okay. So right here, no SMT. Right, I don't really care to see any of this other stuff. Like, yeah, this is an SMT right here. But I'm not going to draw it out in these starting sessions because we know what it is now. We know there's an SMT, SMT TP. We come down. Look at that. Like, it's a beautiful model. Everything here is beautiful. We form an SMT. No, SMT right here. Right, this is your SMT TP. Here's your displacement up after the SMT is formed. Here's your fair value gap. Here's your entry. It's as simple as that. This is just a simple turtle soup model. SMT, displacement up, fair value gap entry, SMT TP gets hit. Right? I don't really care too much to look at these. I only care to look at them in addition to my external model. So yes, it is nice, and I will, when I'm trading, I will be seeing every single one of these setups, and I probably will take trades off of that. but for charting session purposes, it just takes a long time, and I don't want to only focus on these. So now you can see we have higher high formed right here, no SMT. We sell off a little bit, and right here we form an SMT. And looking at this SMT, my bias is bearish at the moment. I have, well, it's kind of neutral because I'm in this 15-minute fair value gap and also tapping into this 15-minute fair value gap that we can see right here. So I would not want to take a trade yet. But if this SMT is formed right here, and this is the SMT TP, I am not ready to take a short yet. Unless this gets respected and we come down and take out this SMT low. But yeah, right here, we get close. We have this macro. Still, nothing's happening yet, and I'm glad I'm not taking a trade. See, let's say I did take a short right here in this fair value gap, because I was bearish, I would get stopped out from this move up here. And then any kind of trade I try to take in this consolidation, it would just not be good, unless I take an internal turtle soup. But yeah, right here you can see it fails. So now that this fails, I am a lot more bearish. After seeing this 15-minute get respected, and this 15-minute get disrespected, and this bullish model right here get disrespected, this would make me a lot more bearish. So now that I waited after that, now I have a bias which is bearish. In addition, you can also kind of just check to see, like, you know, where do we open? Well, we've been trading above the open the whole time. So I kind of want to see the day. I want to see us go lower at the moment because we've been above open. If we also look at the last trading sessions, we don't got to worry about Asia. We have London high and London low to take out. So that's not telling us too much there. But see what happens right here. We have this displacement down. So now I want to see, is there anything that was any SMTs? Yeah, we had an SMT right here. So now after looking at what happened, now you can identify the models or what has happened. So SMT right there. Right, this would be your entry off the SMT. It's as simple as this. Now this is a much better model. 1 minute, right here would be your entry. You have this SMT. Boom, we take out this protected low. We had lower here. Now our goal is to come down and take this. Actually, it's first to take this sell side. So I would be looking for a bearish model to take that sell side. So far, no bearish model. We have a bullish model right here. But again, since our draw liquidity is lower, this SMT right here will most likely get disrespected. Let's keep looking for models. Nothing yet. Yep, this just got disrespected. And still not yet. Still no models yet. Actually, wait, what's this? This is kind of odd. We come up here while we come down. Let's just wait a little bit. We take out this low. All right, we tap into this 1 minute. So this 1 minute's pretty prominent. Is there really an SMT though? This is kind of confusing. I would just wait until this kind of cleans up. Personally though, if I saw this get respected, I would like to see this. Mostly also because this does look like this. Yeah, this is an OTE range. This taps in this fair value gap. This taps into the fair value gap, gets respect, taps into another one. These would be two good entries. This is kind of why I slowed down to look at this a little bit. Okay, I'll explain this in just 1 second. Let me mark these out. Okay, so obviously we disrespect this SMT on this move. This low right here, this protected low, gets taken, right? It gets taken here. After it gets taken, this is showing me that I'm bearish. Okay, we do come in and take this low, but that's fine. We come back up, we tap into this bearish fair value gap. I do expect this to get respected. I may take an entry off this. Then we disrespect, or we respect off of it, go lower, and then we tap into a second one. I would again take the second one. We come down and take profits at this big order block. Now we're having a movement down. Possibly see us go up. So if we go up here, is there an SMT at these lows? No SMTs. But the macro obviously does reverse us in confluence with this order block that we're bouncing off of. Okay, now we're retraced into discount of this move right here into this 5-minute fair value gap. So I do want to see us respect this and disrespect this bearish PD array to go higher. So we disrespect this. I do expect us to go higher here. In addition, I can see if there's any sort of SMT that's going to form. So this could be a possible entry if you wanted to try to be risky. Right, we have fair value gap. This could be a possible entry, take out at this high. We kind of slow down here and we enter this macro, so I would just, yeah, get out of this trade right here. We do have an SMT right here. In addition to this SMT, right, with this being the SMT TP right here. We have this macro, pushes us up, makes us reverse previous trend. We get a massive buy right here. All right, so we're up here looking for any more SMTs that could show us that we're going to stop. Nothing quite yet. This could be something right here. This right here is sort of an SMT. Maybe to go up to this high or up here, so that gets taken. Okay, so we're having a slight uptrend into this macro. As it appears, we disrespect this 1 minute. We respect this 1 minute so far. But we end up just keep going higher here. Not really too much great action. One thing we can expect after we hit this order block right here, we can sort of expect us to just go a lot higher. Because if you're looking at the 4-hour time frame, after we hit this order block, we're going to have a massive rejection. It's not just going to be little and we're just going to kind of consolidate. It's going to be a bigger rejection up. So, and okay, it just helped put us back to previous or recent. So I'm just going to go back to here, finish out the action for today. We just keep running up. It'd be a lot easier to do these charting sessions if I actually trade during the day, because I can actually remember what I see and stuff. Here we have an SMT formed. It gets disrespected, right? We tap into this order block right here. We just want to keep going higher. Again, this is the order block that we tap into. We just keep going higher. It's just a run day, right? This day was just to run. Do we have any SMTs down here? Yeah, we have an SMT right here. we come up. This is a classic thing I like to usually see. If we have a massive trend up, right, very, very steep move. This is insane, right? This is insane. We come down, just for some reason, we have a massive displacement candle down. We respect the fair value gaps, build more structure down here. If we come back up to this fair value gap, we're most likely going to respect it again to sell off. I've noticed that a lot. So yeah, right here we come up, respect this fair value gap. In addition to this, we do form that I would consider this sort of like an SMT maybe. This right here is an SMT. So yeah, right here, this is an internal model thing I usually see as well. So you have your external buy side, right? This is your internal buy side, which will usually get swept or taken. In addition to that, we have an SMT right here, with this high also being protected, and this being your SMT TP. We come up, we take internal, instantly sell off, leave external. This right here would be an absolute A++ entry. I would take this, if I see this and recognize it, I would 100% of the time take an entry right here. We also have this macro indicating that we want to reverse to the downside. Beautiful right here. This is absolutely beautiful. We sell off and then we ended the day here. So that is really all I have for this video. I hope you guys enjoyed the chart annotation review series. So we're just going to hop into charting sessions. Also, feel free to check out my Discord in the link in the description. You'll have access to a free course. I'm going to be live trading soon. You'll get access to all of these charting sessions, which will have a lot more because I will actually be trading during the day and I'll remember things. So yeah, that's all I have for this video, and I'll see you all in the next one.